Good afternoon everyone, this is Connor from Zenfinex back with some more analysis on the major Forex pairs. And today we're going to be going through my thoughts on the GBP USD market for 2021. And this is a pair gaining significant ground really since September 2020, and it's now trading in the mid 360s. And in this video I'm going to be running through the fundamental events which could change the price, and then I'll move on to some higher time frame analysis to give you a potential bias when picking your own intraday positions. Okay, so let's look at the fundamentals from a sterling perspective first. And first of all, it looks on the surface that we've seen the back of all the Brexit uncertainty after the EU and the UK finally reached a deal at the back end of 2020. And what people may not know is that the sterling actually finished up on the dollar last year despite all the uncertainty, so it could really be a nice year for the sterling. However, they are still yet to work out what's going on with the larger services sector. They left that bit out. These negotiations have actually begun today in Brussels, and there's rumours that there's going to be some more stubbornness between the two, and this could really hurt the pound in the short run. There is scope to be optimistic around the UK's situation about the pandemic. Despite seeing record death tolls every day, the UK has vaccinated more people than Europe combined, and this accelerated programme is set to continue. And finally, we have the Bank of England growth forecasts, and they've substantially improved. The British economy is set to contract in 2020, as we know, but this is now said to be just 9.5% instead of the 14% predicted. This is a really nice jump, great news really. And looking at the fundamentals from the US side, I did go over some in my previous video on Euro USD, but looking at it from a broader, bigger picture for 2021, I mean, we're no doubt going to hear more about fiscal stimulus. We already have. The most recent news was that the long-awaited second COVID relief package worth $900 billion has been released. This seems to be the way that the US are going to handle things now and in the future, really. And we also need to look at the facts as well. The poor labour market reports, we had them last week with the NFP. We're seeing increases in unemployment claims in the US. We're seeing changes in the labour markets as a whole. And the fact is that the dollar, it cannot recover until these facts change, which seems a long way off at the moment, really. Okay, so I'm looking at the chart now, and I'm going to keep this video on the weekly, the daily, and the 4-hourly charts, because the purpose of this video, like I said, is to give you a bias that when you're doing your shorter term analysis, your intraday positions, you're going to have this longer term bias in the back of your mind. And that's a really powerful thing. The first thing I see on the weekly chart is I see this price inefficiency or market imbalance left from 2018. And 2 weeks ago, we did feel it. We did then have a natural reaction off of it on this candle here, which I'll zoom in. But now we're really at a stage where we can start to break above. And what I'd like to say about breaking above is, you see this price action here, these three bearish candles. There's not much going to be stopping the bulls once we get past this market imbalance. And so I'd be aiming for, no doubt, these April 2018 highs, which I'll mark for you, which would be a really nice trade, of course. I know some people like to use the moving average indicator, and I don't mind doing it, so I'm going to put it in there for you. And we did have this cross in June, but now we're trading considerably above. We continue to do so. We had a nice retest in September. Again, just touches off of the 20-day EMA, and we're now really trading in a nice bullish momentum. And what I would like to say as well is, I do think the absolute floor for this market, just to have in mind, would be here. If at some point throughout the year we did get to this level here, this weekly order block, then I'll probably be doubling up my risk from buys from here. Really, really strong level. So have that in mind when you're doing your shorter term analysis. And I'll just move on to the daily time frame now. If I delete these drawings, I'll keep the highs in there. And what I'm seeing right away, really, on the daily chart, is I'm seeing, as you all probably are as well, a nice clear ascending channel. Again, more great bull signs, which is all just adding together for our confluences. And what I'm also seeing is we are threatening to break these daily highs here. I am actually expecting this to break these highs, and if it was to happen, then this would be the order block that's left behind. Okay, so this is quite a nice buy opportunity here. It's not an order block yet, but I'll mark it in there just in case at the end of today we have broken this high, just to bear that in mind. What I might also do as well is I like to set alerts on these high levels. So we're at 35739 roughly every time. Okay, so there's my alert in there as well. As I said, we need to wait for price to break this structure before we look at pullbacks and buys out of order blocks. If you can find a buy now, I'd be surprised, because I would see that as a FOMO trade. But if you have a strategy that does, then brilliant. For me, for my price action strategy, I will be waiting. Patience is the key, of course. And let's just go on to the 4-hour chart now. I'll leave that order block in there. When we go down to the 4-hour chart, we're now looking for more intraday positions, more shorter term positions. And already, this daily order block here that I literally just drew can be refined even further. Down into this level, which is, if I draw the long position on, it's to the 46 pip SL. So again, I'm not going to do it today, but I would, once price gets into this level, go down onto a lower time frame to refine the entry. Just to show the power of these order blocks. If we look here, this was the most recent buy opportunity that I got in, and we had this nice break of structure, break of these highs here. This was the last bearish candle before the break of structure, leaving this order block behind. You can see we had to be patient. This is what I mean by patience. We did end up touching this order block, and since then we've been in a nice uptrend. I have already taken profits on this. If I would have held, probably should have held a little bit or some of my position, but I was happy. Around 5 or 6 are on this trade. So these are the levels that, I'll draw that one back in just so you're there. These are the levels that I'll be looking at when price does eventually retrace. Other than that, off the back of the fundamentals, we should be looking for buys. I've given some potential buy opportunities on each time frame. Again, I stress the importance of not going in too early, as it can leave you in way too much drawdown. It squeezes you into stuff you don't want to be involved in. And other than that, guys, that is all for today. I hope I've given you a nice higher time frame bias for 2021. I am going to be looking to buy unless the market and the fundamentals tell me otherwise. If you have any thoughts, just drop a comment. I always reply to them. I like to see other people's views on this. And other than that, guys, keep liking and keep subscribing to the videos we're putting out. It's really great content for you. Any questions on the video, you can also message me on the Instagram above me. But other than that, guys, take care, everyone, and I'll see you all for the next video.